Bitcoin is back to $109,000. The market is getting wrecked. A lot of people are panicking, panic selling, but let's stay level-headed. Let's take a look at the charts because the charts always lead the way and give us an indication of what is happening next or what is likely to happen next. Nobody knows the future, but it's all about probabilities. And when certain levels get breached, then certain targets become higher probabilities. And in that exact way, I was able to predict exactly what has happened so far. At the beginning of September, you can see here on this chart, I drew the squiggle. I will put on the screen the original timestamped one. September 1st, I said this, we were trading at 109. I said we had a market structure break on Bitcoin. We made a lower low, which means the bullish uptrend has been broken. And when that happens, we tend to see a scam bounce or a short squeeze because everyone thinks that it continues going lower. They all start selling here and they get caught off guard. Then it rallies up to this Fibonacci golden pocket. And then everybody thinks, oh, we're so back and we're going higher. They all buy back in and they get wrecked as it reverses back down. And I've seen this so many times. That's why I'm able to make these predictions because the markets are not random. They do this in order to trick as many people as possible all the time to get wrecked and take their money. So this is the perfect way to do it because everyone falls for the trap every single time. They short the bottoms, they long the tops, and they get wrecked both directions. So this is pretty much picture perfect how I called it at the beginning of September. We went up exactly to the Fibonacci golden pocket. We went to just under 118,000 and we dropped all the way back down. Now, as you can clearly see here on the squiggle, it is targeting lower. It is actually targeting this level over here, somewhere between 99 and 101,000 if this continues to play out. So I do think we get a bit of relief here, maybe short term on the low time frame charts. We could push as high as 110, 500 or maybe 111,000. But I think the direction is clearly still down. I think people got way too complacent even at these levels. 110, 111. Everyone's longing it because they all believe that we are going to get October because October is historically the most bullish month for crypto. But when everyone expects the same thing, when everyone is almost guaranteed that we're going higher in October, when everyone thinks that we're going to get an alt season and a pump, well, what happens? Obviously the opposite because the market does not, it's not here to make everyone rich. It's not here to bail everyone out. It's not here to do exactly what everyone thinks when the masses all think in one direction. So usually when everyone is expecting one thing, we get the opposite. Okay, and that's exactly what is happening at this point in time right now. So we do have over here these lows, and I think they will get taken out. That's the liquidity. So that's about 107. If we lose 107, I think we're probably targeting this level, and we're looking at 101 to maybe 99,000. And that is going to be a very, very key level because that is where the 50-week moving average is. So loading up the weekly chart over here, you can see this 50-week moving average. It is the bear/bull decision line in the sand, if you call it that. So this is where I turned bullish originally at the beginning of 2023. We reclaimed the 50-week moving average, and that was the start of the bull market. The proof is all here, publicly timestamped on my YouTube channel. I turned bullish then, and you can see it's acted as support. As long as the price is above the 50-week moving average, we are technically in a bullish high time frame trend. And once we lose that, well, then we get our bear market confirmation, and we reverse back into a bear market, basically a high time frame bearish trend, where, as you can see over here in the past, you can go look this up, every time we lose the 50-week moving average, we tend to drop another 50 to 60%. So at this point in time, about $99,000 is that line in the sand, and that lines up perfectly with where I drew the squiggle, the potential target here for a drop down to that. At that point, we're going to have to wait and see, do we get a reversal back up? And another final run like everyone's looking for, a final kind of melt up or blow off where it runs back to new all-time highs, maybe by the end of the year for the cycle blow off top? Or is it game over? Do we close below the 50-week moving average and do we start our new bear market? So the problem is, if we're looking here on this weekly chart, is we have massive bearish RSI divergences. Basically, these whole three thrusts here are not confirmed by the RSI, and this is a big problem. You can see 1, 2, 3, and every time on the RSI we're making lower highs. That is a bearish RSI divergence on the weekly. You can see the same thing happened in the previous cycle top, and we had 2 thrusts over here, but now we have 3 thrusts, either 2 or 3. That's what we tend to get regardless of the time frame, and then it's game over. And you can see that we get the confirmation once we lose the 50-week moving average, which is currently about $100,000, and it seems like we're getting there pretty fast. We're also at the exact same time. We're literally less than 30 days out from the same cycle length that put in this top over here. We have the bearish RSI divergence. Basically everything is pointing towards, in my opinion, that the top is in. We just made a lower high also, which is exactly what I predicted. I showed you at the beginning of this video. We had a market structure break. We went back up to the Fibonacci golden pocket. We got rejected, and we're on the way down now. And basically, this looks like the bear market could be starting here. And I know we have October ahead of us. We'll see what happens, how this week and this month is going to close in a few days from now. But if it closes here or lower, it's basically bearish. And I think we see a red October. That's just how I see it. Again, for me, I try to just interpret the charts as much as possible. If it's bullish, I turn bull, like I was at the beginning of January 2023. And if the charts suggest bearishness, well, then I'm going to say that in exactly those words, and I'm going to be looking to short it. You know, I don't care. We can make money both ways. So obviously this is something that you need to be aware of if you're holding spot and you're hoping for much higher in a cycle continuation. You need to consider and weigh out the risks, and what are you going to do if this is the top? Are you going to hold your bags all the way down? Where are you going to sell, right? That's something you have to consider. Or are you just going to hold it, and if you believe it's going higher, what happens if it drops? Are you going to hold it and just add to it? All those things you need to consider. For me personally, I don't want to be holding any spot altcoins throughout the bear market, not even swing or trading Bitcoin. So, you know, if this is going to drop, and it's going to drop 50% below the 50-week moving average like it tends to do in the past, we're looking at Bitcoin back to 50,000s, probably sometime in 2026 if the cycles repeat towards the end of 2026. So why would I want to hold anything through a 50% drawdown when I can just buy it much lower towards the end of next cycle? And then you add in the actual like macro stuff on what's happening in the space. We just had rate cuts, which in my opinion is not bullish. It's probably bearish. I've shown that before. If you look at 2001, 2007, we got rate cuts, and that was in the months that followed, led to massive drops in the financial market. Basically, the crashes of the bear markets, 2001 and 2008. We have the same situation as 2008 setting up right now. We have the rate cuts. Housing is at the most unaffordable levels. The cracks are starting to show. All sorts of models, like the Warren Buffett indicator, are at the highest levels ever, higher than the dot-com bubbles. You know, you're looking at all this stuff, and there's just a perfect recipe here for massive, massive downside. And what is the upside? Like, you're gambling on the fact that maybe they're going to keep printing money and inject liquidity before they all rug everything and it drops 50%. So the way I see things, this looks bearish. And we'll see. We get the confirmation officially at 100,000, but that's still $9,000 lower. If we get a weekly close below this 50-week moving average, then I'm afraid it's game over, and the data suggests that we're going another 50% lower. And if you're looking at what's happening, we see Michael Saylor with his strategy that have been buying billions, the price is dropping. Meta Planet, they're currently almost at their average entry. On almost $3 billion, we're pretty much at their entry. And all these other companies who have raised money and aped into crypto at the top or near the end of the cycle, what do you think is going to happen when crypto starts to drop below their average entries? Do you think they're going to start getting spooked? Are their investors going to force them to sell? And what happens with one of these over-leveraged digital asset treasuries? What happens when they start blowing up and we really start to get the unwind and the selling? The same thing happened in the previous cycle. We had it with 3AC, the hedge fund, right? We had it with Terra Luna. That stuff, people were massively over-leveraged. The stuff imploded. Then we had the scams with Celsius and the lending platforms. It's always the same thing. There's always people who overextend, who over-leverage, and then when the prices drop, they blow up and it creates a massive forced selling. It unwinds the entire market. And I think it's just a different flavor this cycle. Obviously, we can't repeat the same stuff every cycle because people have learned from that. This time, it's probably in the form of digital asset treasuries. Companies who have nothing to do with crypto or finance, who are raising money, who are over leveraging, buying crypto at the top or at the end of an almost 4-year cycle that so far has been playing out perfectly. What do you think happens when the prices start to drop too much and one of them blows up and the prices drop even more and then even more of them blow up and it creates the next bear market? And I think there's enough evidence here to potentially suggest that we are about to start a bear market. And I don't know if we're going to still get an alt season or not. I mean, everyone is hoping for it. I hope that for the people who are invested in it, that you can make some money. But personally, I'm not counting on it. For now, getting back to the chart, getting back to the technicals, I think we're targeting $100,000, and I think we're bearish until we reclaim 118,000. If we can get back above 118,000 with at least like 2 daily closes or so, then we can start to consider that maybe we still have a final leg or another leg ahead of us in this bullish trend. But until that happens, I think the odds favor more downside. I think we're targeting the 50-week moving average once again. And unfortunately, I think this time we are probably going to lose the 50-week moving average, in which case we get our bear market confirmation, in which case we're looking at probably another 50% lower from there. So that's how I see the charts at this point in time. Again, it's not what I want to happen. It's just how I see the charts and how I'm interpreting them based on my experience with them and based on previous data and patterns. That's just simply the reality of how I see things. So let's see how things go. Smash the like button if you enjoy these updates, whether you agree with the analysis or not. And if you have a different view, feel free to leave a comment. Keep it respectful. This is just my view. Maybe I'm right, maybe I'm wrong. I tend to be right more often than not, but also sometimes I can be wrong, for sure.